Welcome to this domestic supply chain summit fireside chat. I'm Thomas Watson, resident trucking expert here at FreightWaves, and we're going to be talking with Henry Byers, director of pricing at KCH Transportation. It's there's a lot of stuff coming up as well, especially the 2025. We're starting to see, if anyone's been paying attention, the return of seasonality and other wonderful things. But I thought it would be really great to get Henry's impacts. He's out there in the trenches on the front lines figure out what's going on in the market. Henry, it's great to see you again. For folks who don't know about you, tell us about yourself.
Yeah, so previously, before I was director of pricing in KCH, I worked for FreightWaves, head of ocean intelligence, and then really got my start in the logistics industry about 10 years ago here in Chattanooga with Access America Transport, who, of course, was purchased by Coyote, then UPS, then divested to RXO. So you have both domestic and international experience, but most recently, obviously, on the data side and in working with you guys over at FreightWaves, was able to bring what I knew about domestic truckload pricing over here to KCH and been here since February. And yeah, it's been good.
And I think the pricing thing's so important because it's one thing to have data and being well versed in data. It's another thing to haggle with and try to figure out how to land that right pricing point. You know, what are some of the bigger trends you've seen throughout this year, and then looking ahead? What has there been any kind of swing in the momentum as you're having these conversations and these rolling RFPs?
Yeah, I mean, it depends on what trends you're really talking about, but I think overall, as far as rates are concerned, it seems to me that a lot of shippers are still securing really unrealistically low rates. I think there's still people in the brokerage landscape or companies in the brokerage landscape, I should say, asset-based carriers potentially still pricing freight, really close around to where the spot market currently is. And it seems to me that if the market were to truly turn up in 2025, which I think if this next cycle has obviously begun, then there's a lot of exposure on the table, and we could see a lot of failure in some of those routing guides. So it's been really surprising to see just how competitive the rates are. And we're talking about almost 0% margin in a lot of cases, at least from our side and how we pursue the market.
And that kind of ties into, is it across the board with customers? Is there specific? I know there's always been price sensitive customers. I feel like I've dealt with a few of those. But is the vibe amongst all? Are any of them kind of giving single digit increases? Is there any talk that maybe I need to prepare my routing guide, or is it still right now? I'm gonna get it while the getting's good. Get that extra 2% off and see where it goes.
Well, interestingly, of the over 2 billion that we've priced here in the last 6 months, we've really only seen one that has like an index linked contract proposal where basically they're looking at the national average. It's obviously from DAT, but it does look at basically the monthly shifts over time in the spot market and then adjust based on that national basis. So I'm seeing some creativity there. But I think a lot of what I'm seeing is really customers still chasing after that bottom dollar, and it makes me wonder if over the last couple of years that maybe there's been some turnover. Obviously, there's a lot of turnover coming out of 2021, 2022. That maybe we haven't seen a hot market in quite some time, and so maybe there's been some maybe they got a little bit comfortable with those rates, and maybe they just how close they are to the spot market though just makes me think that we're going to see a lot of failure in those routing guides if the market really turns up like it could. I mean, obviously we're seeing a lot more volatility. I feel like there is obviously a return more normal seasonality, but we're just really one major event in 2025 away from things really getting hectic.
Now let's talk about major events because there's a lot that can happen. I even think right out of the gate, there's the ILU stuff in January. What's kind of on the radar? What do you think maybe some of those shocks are going to be folks to be paying attention to?
Definitely the strikes. I think it could become significant, especially when you're looking at a lot of this pre-forward volume that we're seeing. And obviously, right upon Trump's election, we started to see import volumes lift again, and then how that can basically concentrates itself into Southern California. Basically, what we've seen over the last 6 to 12 months, we have seen a pretty high concentration of those import volumes coming into Southern California. And after we pass that major peak holiday retail season, things kind of calm down as far as for the demand side of the U.S. But I do think that's one thing that's pretty major on the radar. And I think another is just, what happens upon, Trump's first days in office. Is there some type of stimulus that goes into effect? It would be hard for it to, obviously, with inflation showing, what it has been showing here recently. It looks very, um, the volatility potential looks very high going into 2025 because if you were to do that, obviously we're concerned about inflation, but then you have the port strike, and could that slow things down? I mean, it's hard to really predict. It's probably one of the hardest, one of the hardest cycles that I've seen in the last, 5 years. That in terms of being able to predict really where we're headed on to 2025 because of the new administration.
I'd be worried about on that domestic side as well. We're bringing in all record numbers of imports for fear of not only labor disputes, but the tariff potential, whether actually realized or not. That was a fascinating thing as well. That if that'll cause a big run on, because some folks have estimated that you're either fudging the numbers on your declared value for the tariffs, or the data is right and you're going to have to pass the costs on. And that just feels like another big question mark of how the heck am I going to deal with it when I'm thinking of how much projected volume am I going to get?
Exactly, and then you look at consumer demand, and I would say anybody would say right now that, consumer demand is, super high going into this, peak holiday retail season. And it's one of those things where could we be left with, another inventory glut, another bullwhip cycle. So it's gonna be really interesting to see how it all plays out. Because again, it looks like on certain fronts, the economy is looking, precarious, but then on others, there's a lot of optimism. So it's just, the underlying fundamentals aren't super solid, but I'd say that the optimism is actually pretty high. And I think there was a couple months there before the election in the data, super wonky, right? Labor Day, there were some head fakes there because July 4th, if you look back at that data, that was certainly a lot more demand driven, but we saw the market looking pretty bullish at that point. It made me think, okay, well, the risks for a market flip super high. And I think at this point, obviously the risk, as a brokerage is getting short squeezed on that push up. So we've certainly been, hedging in sense of, not taking these super aggressive rates and making sure that we have, the right buffer in place to where we're not going to service failure our clients because we really don't want to reject any of that freight that we commit to on those annual contracts. We'd rather accept the loads, move them, market plays out however it plays out. But that's also been something that's really interesting. Just seeing that last couple months of data there before the election, it was almost like a wait and see approach. I don't know if you felt the same way. It was pretty bizarre in a lot of what we were seeing. That Labor Day, one of the strongest seasonal trends, just was almost non-existent in
Yeah, it
a lot of
definitely felt that
cases.
way. I got head faked as well, July 4th. I learned my lesson though back in February when I tried to guess the market turn on Groundhog Day, which that did not work. So, we're all, we're reading tea leaves, it feels like. And I liked you got a great point on the brokerage aspect. From my understanding, brokerages have now more market penetration. They're now having more access to more RFPs, being treated like an asset-based carrier almost in terms of what I'm willing to give. Is there anything when you're like you said, being careful on your pricing? Is there any fear that the carriers having the relationships and stuff has the type of carrier changed, or is it going to go like full pirate mentality and you make this dedicated carrier, you make a deal, and the next thing you know, they're like, I got 50 more dollars. I mean, is there any kind of fear, concerns on that, or is it a different type of carrier almost?
I would say that I mean, we're certainly aware. I mean, anybody who has experienced these cycles, I think, is certainly aware of the risk there. But I think it has been interesting to see. I think when the market's solved, like it has been for the last couple of years, drop trailers, dedicated. I mean, you see the return. And we look at the private fleet growth as a good example as well. You've seen, the shift of volume, the shift over to a lot more dedicated assets. Like I say, think about the drop trailer, right? Think about if the market, were to really turn up. I mean, how realistic is it to have, all of these lanes, thousands and thousands of truckloads where you're going to be able to get those drop trailers? I mean, I do think there's pretty high risk and high exposure that maybe is a little bit more under the surface than just pure rate fundamentals that exist. And I think from our perspective, we certainly are being very hesitant on some of those, you know, just higher cost freight from our perspective, right? I mean, these drop trailers, things of that nature. I mean, it's harder to set up. So I think really fitting in that live load, live unload with customers who really appreciate our white glove service that we bring to the table. And we obviously do a lot with things like expedite. Really, that's our bread and butter. So we've been a very hesitant to get to that, to commit to some of those pieces of those RFPs. But I'd say that's really been interesting to watch. Is that like what you're alluding to, which is I think what is going to happen whenever these rates turn up, and are people going to be chasing this higher dollars? And I think the history would tell us that if the market turns up high enough, that certainly they will be.
And I think the private fleet is such an interesting aspect. That's one of those questions I've had too. Watching the private fleet growth, that's been the big. It was like 67% of shippers through the National Private Fleet Council would like have all their outbound by 2023. It's up to like 74% total hauled, so they're increasing it. They want more. I do wonder if there's the either it's stealing more out of it, or if it'll eventually go back into the for hire space. Have you all noticed anything on the bids and anything else you're seeing? Like, man, I used to see these lanes, or now the volume they're asking for is much lower because maybe a private fleet's taking it.
I think it's happening for sure. But I think what was the growth? Was it maybe it came back private fleets as a total percentage of volume, like 5%? Um, so yeah, I wouldn't say it's super noticeable. I think it's a trend that's certainly happening, again, I think things like the drop trailer, the certain requirements around some of these loads, you feel like it's almost it's such a high ask of a brokerage. You almost think that maybe that same type of mentality is there, where these carriers are now fitting around my operations, making my operations more efficient, as opposed to doing things on their side to be to make it a more efficient process for the carriers. It's one of those things that's really interesting to watch. I think the more the market turns up, you got to really think about the 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 nature of that freight that's not handled by your private fleet, your dedicated carriers, drop trailers. It, you have to put more resources around, you know, basically play defense against this market increase. And I think the nature of it being harder to find capacity, it just has spillover effect into all this other freight. And it's not to say that it'll all be pushed out on the spot market, but I do think you're going to see a lot, because I mean the hotter the market is, the more. I mean, it's one of those things where it's like the assets are going to have a harder time be justified, for the amount of time they're spending, in those, those facilities or whatever. So it's one of those things. I think the spillover effect's gonna be interesting to watch, because I think 2 years is super long, for shippers to get things back under control and to continue to be chasing kind of bottom dollar a lot. It's not everybody, right? Some people I think have had a longer tenure than others, but I think they certainly are aware that it could turn up, but I don't think they're quite um, sure just how bad it could get. And again, it all depends on really what happens in 2025 with all these, external macroeconomic factors we've been talking about.
Do you think the capacity as well? That's one of the big trends. For the longest, we've been driven by excess capacity, and you look at the data. Some carriers are still hopping in. Well, I'm kind of curious from that aspect. Do you think from a longer trend, right now in the soft market, it's been, well, I got to have as much carrier vetting out, as much verification. You have to be perfect and spotless. Do you think as the market shifts in this may start to see routing guide, do you think that may loosen it? Or you think we may see, what are your thoughts on the capacity trends? Because I feel like right now everyone's really focusing on the carrier. But if I was a rep right now and I started my book 6 months from now and I'm struggling to cover trucks, you think somebody will get a little more loosen it up, some of these restrictions, whether it's 2 years, 1 year for aging?
Yeah, I think similar fault there to what I was mentioning, the spillover effect. I think that would certainly happen. I think, when you get, it's going to be so hard. I think when we look at all the technology at play, I mean, it's going to be hard to see. I was watching an interview with Charles Dahoney recently, Upwell. He was saying that the new, like, are you going to see any large, like super large brokers come out of this next class of brokerages? It'll certainly be interesting to watch. So it's almost like, the bigger you are, the more time you've had over the last couple of years to really get that, like you're really that verification process, compliance, things like that. I mean, it's gotten to a point where it's become so easy. It's hard for us to, ignore in any capacity. So things have been. We've had 2 years basically to get tech implemented for that, but then also all these other processes and workflows. And I don't know for these, the larger guys, if that'll be the case. But certainly, as far as setting up carriers, speed to setting up carriers, making sure things are legit. I mean, that's obviously still going to be something that would be top of mind in terms of having access to that new capacity. Because I can't imagine there's a ton of carriers um, getting into the game that aren't kind of aware of where the market's been in the last couple of years. So it makes you wonder if some of these carriers are armed with better data, better intelligence, and perhaps maybe are more likely to be more financially solvent moving into the future. But I don't know. I'm sure there's still plenty of people getting in the game that really have no clue. So it's hard to say.
Reminds me of a talk, I think it was Dean Croat from DAT had spoke. A lot of the carriers with the technology, they don't have to work as much if their truck's paid off. So it's like this situation where they're just coming in and out of the market. When in the past, we could really see if you, it wasn't as much, it's like Uberization almost, where you can just hop on the trucking equivalent of a gig economy. Final thoughts, got a little bit of time left here as we wrap it up. Uh, Consolidation in the space. You think brokerages are going to consolidate, or you think there may be another Coyote or Access America hiding in the midst that'll burst forth?
Yeah, I think there's some room for some consolidation. No doubt about it. But I think there's room. There's certainly room. I think when you look at, there's been some surprising technology. So at FreightWaves, we hosted these conferences about 4 years worth that I was there. It just in the last year, I think this tough market has really shed. Obviously, a lot of the venture investment and capital investment from a lot of these. Supply chain tech isn't as hot as it was during the post pandemic era, but basically these last couple of years have really weeded out. I think a lot of the bad technologies that probably didn't have a chance. And I think what's interesting is that just how tech enabled you could be from the beginning if you really knew it all. Now, does anyone starting it have the experience to know, how to adopt all these technologies? But it's really been interesting to see, a lot of these internal proprietary technologies that were being built by these big brokers. Now, the playing field's been, leveled in a lot of cases where you work with some really bright minds that came from some of these larger players and building these things that they spent billions, maybe billions, who knows how much investment they have in that tech. But I think there's certainly room. I think kind of agree with Charles. Like, is there going to be, is there going to be another, renaissance period? You could say maybe where you're going to see some of these guys grow from nothing to big players. But we're certainly, one of those that, now we're armed with tech that any of these big guys have, and that's one of those things where it's going to be dangerous for us moving into 2025 in a good way. We're super bullish about KCH heading into 2025 and beyond for that reason.
Well, speaking of KCH, folks want to learn more, get in contact. What's the best way to find out?
Yeah, you can reach out to me. I'll get you connected to whoever you need to get connected to. Be happy to hear from anybody. Byers at kchtrans.com. And then obviously our website, kchtrans.com. And yeah, we'd love to hear from you.
Perfect. Henry, great getting to catch up as well. Gonna get my popcorn out as well. It looks like we're going from the Empire Strikes Back to the Return of the Jedi, metaphorically speaking. So we're back. But thanks again for your time. That's gonna be a wrap for this fireside chat. If you're just joining us, don't worry. We have a lot more great content coming up.